Greetings, everybody. This is Jeff Scott. It is almost Sunday, close enough. It's 11:37 Eastern Time, and Sunday is August 6th, and this is my weekend review. I'll be cautiously optimistic or pessimistic, depending upon how you're going to look at the total picture, with the question, time to melt up. Everybody says this market's going down. Every day it goes up, it goes up, it goes up. It just paused for one of the longest periods of time with low volatility, within 1% on a daily move in the S&P. I think 11 straight days or more. And then Friday, jobs report surprises to the upside, and the markets break out. One day wonder, ready to drop like a lot of pundits say, or is there one more time to the upside? I'm betting there's one more time to the upside, but I'm also in the camp that we probably have a pretty significant correction coming as we get closer to the U.S. election. Disclaimer, this session is for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I am not affiliated with any software vendor or trading company. Tools I demonstrate are those that I use in my daily trading. I have paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I have built my trading plan and program and what I do based upon experiences that have impacted my life. It started by reading Canceling from O'Neill. I think it gives us a great base for understanding the markets, investing versus trading, stops, money management. Now, I will say that it's been some time since buying cup and handle breakouts have worked, and thus I've learned to expand beyond that. Morales and Katcher, who are ex-O'Neill disciples who were money managers for O'Neill, have brought us pocket pivots, Bible gap ups, and recently a great book on shorting. And then Ian Woodward and Ron Brown took some of the best of Canceling, and with a small assist for me on one of the indicators, have taken Canceling, made it online or on your computer with HGSI from highgrowthstock.com. And that's how I do, or the tool that I use for most of my after-hours analytics. I like the data on my disk. It makes things much faster. This is George Lee, one of my trading friends from Canada. And then up here in the upper right-hand corner, I just want to call out Van Tharp, sort of the master on position size money management. And then lastly, John Person. John's become a close friend, but for those that don't know John, he's a world-known author, lecturer, trader, mentor, and he's created some pretty cool indicators which are a major part of my trading. And one of the things that I like a lot about his indicators are they haven't changed in 20 years. He actually brought something new this year, but it's just another way of looking at volume, an improvement over what we did. But his main indicators, his HCD, LCD, and PPSs, don't change. He's written a number of great books. These are two of them. The one on the right is probably going to be released as a new edition soon. Don't be fooled by some of the titles. I spend a lot of time trading with John. He does look at futures, and I think he probably trades some index futures, but I see him spending the vast majority of his time looking at stocks and option trades. I have a lot of programs. What I need is TradeStation and Thinkorswim. I also use Genesis because there's some charting that I can do on Genesis, but not the others. And as I mentioned, for after-hours analysis, I use HGSI, some EdgeRater. I do like to follow seasonality, and there are a number of websites I like as well. For those that don't know highgrowthstock.com, this is the website. The reason that my email address is hgsidoc is not because I own highgrowthstock.com. It's not because I'm paid by them. I just adopted that because I do so much unpaid support for them. So I'm an unpaid volunteer, as are others that like to help others in the marketplace. You hit the free 30-day trial. You get a free trial without a credit card. You go under investing strategies, you'll see a number of names. Ron Brown, almost weekly, if not daily, puts out a wonderful educational video blending education of trading with, at the same time, education on HGSI. And then I have my videos there as well. I've been sort of pointing this out as well. John's meeting is coming up in about 6 weeks. It'll be the weekend of September 24th through 26th. In addition to that, I'm holding a one-day session prior to John's meeting on the 23rd. It will most likely be at the Palm Beach Gardens Hilton as well. $400 if you are not attending John's meeting, including lunch, or $300 if you're attending John's seminar. And I throw in a bunch of goodies for those that attend, although except for the PowerPoints and movies from this video, if you've been to my prior meetings or you have my indicators, those are the goodies that I usually toss into everybody, my indicators. Oops, wrong way. So I always like to ask the question, where are we right now? It's a pretty important question. We've been coming off of this probably since the end of February with a little bit of pullbacks along the way, but just a massive move after we sold off in the beginning of the year. Are we getting up here to where it's time the market's going to roll over and sell? Yeah, we're getting close. But I don't know how deep we are or how late we are in this ascending period. I think we go higher, but reality is, what do I know? I'm going to watch the market every day. I'm going to trade the market I get, not the market that I or anybody else thinks we should be getting. And so based upon where I think I am, I might be looking at various strategies. As I get more and more concerned, I will raise cash, take smaller positions, and start to sell premium. But I still wonder if we don't have some additional upside left in this market. Speaking of upside, this is how we ended Friday. Unless you were heavy in utilities or gold, you should have made money on Friday. I know it was a surprisingly strong day, considering many of the concerns that folks had about the employment number. Now, the strong employment number could have some untoward effects. It might cause the U.S. dollar to go up. That is not good for commodities such as oil and gold. Certainly gold sold off on Friday. But it might be good for certain companies, and we'll talk about those as we go on. The other thing that the strong economy might lead to is higher interest rates. And again, that would be potentially bad on gold, but may have explained the strength in the financials, regionals and big nationals, insurance companies, and even broker-dealers and credit cards. So very, very strong day. Now here is my Thinkorswim views. And remember, for those who have not been here before, upper left-hand corner is the E-minis, NASDAQ in the middle, YMs or the Dow futures on the right, Russell futures on the lower left, and then the VXX, or VIX rather, VX futures, and then the dollar. So what do I see here? Very quickly, I see new buy signals occurring on the Dow and on the Russell futures. I see us pretty much across the board, except the Dow, or the futures which had pulled back some, breaking out to new highs. I see the VIX down in the land of complacency, and the dollar trying to get back above the 200-day moving average. So very strong markets. If we look at the weekly, we could see that not only did we finish at the high of the day, we pretty much closed at the high of the week across the board. If I look at my daily, weekly, and monthly charts on Genesis, and the first column will be the E-minis, then the NQs and NASDAQ 100s, then the TF, which is the Russell, the NYSE, and the YM, the Dow. And what we see is, first of all, you could see that Friday across the board ended at or near the highs of the day. And then again, we had pulled back some in the Dow. We broke through that. If that's a flag, we took out the top of the flag. And boy, if that's a flagpole, a little bit, probably I'd have not tight enough for us to be a flagpole. but this is a pennant and that's a breakout. Do we match that as one more leg? Do we match a percentage? I don't know. Bottom line is everything's in a buy on the daily, everything's on a buy on the weekly, and the monthlies are also on buy. So it's hard not to be excited by this market if you're bullish. But as I said, I still think the market's coming down before year's end. I mentioned rates firmed up. So you can see the 10-year bonds over the last 2 weeks have drifted a little bit higher, as have the 30, but they are still near the bottom of their range. Looking at some of the breadth, the Russell 2000. So we're looking, when I say whatever indicator or index that I call out, that's in white, and in yellow will be the spiders. When you can't see a separation, they're probably overlapped. So the Russell 2000, so the small stocks, and the 1,000, the 1,000 largest stocks, both AD lines are hitting new highs, and the market is in sync with those highs. Now, interestingly, the NASDAQ 100 also hitting new highs on the AD, yet the NASDAQ is trailing. So that's interesting, and perhaps that's a little bit of a divergence that could put one in the at-risk category. If I look at the percentage stocks above the 200-day, and this is on the weekly charts, and above the 40-day, you could see that we're in the higher part of the range, but we're not where a reversal is obvious. So there's been some market rotation over the last couple of weeks, improvement in the indexes, but not to the point where we are so overbought that a correction is necessary. Now, if I look at the 3-month, new high, new lows, we did come up to the top and backed away and actually put a little hook. So there might be another move back up to the top. That's been a pretty reliable indicator short term that when we hit that point, the market pulls back for a short period of time. Taking a look at the buckets, the good news is if you take the S&P 1500 and look at where they are in their Bollinger Bands, 58% are above the midline of the bands, tending towards bullish but not over bullish, yet 14% of the stocks are above the upper band. So it's as if there is exuberance in various small sectors in the market or groups of stocks, but the market itself is going through somewhat of a rolling correction and not overly extended. Now, at some point, we're going to look for evidence of a market rollover. And over the last 50 years, the Hindenburg has been a clue as to when the market has topped. And when you start to see a series of these signals, as we did in 2007 and 2008, it tells us to run for the hills. So I will be monitoring these weekly, daily, and as you could see, if you could read down here, on the NYSE, which is the classic, we haven't had a signal in months. And on the Russell 3000, we did have a couple of signals in May, but we have no signals now. So right now, no evidence of a big correction by Hindi. We had the bulls were in control here really since the late part of June. So now for about 6 weeks. They started getting weak. The yellows popped in, a couple of reds. So for those who haven't been here before, this is the Woody indicator, and it's percent B times bandwidth. And we use this as a buy-sell signal. And notice we had a shot of kahunas on Friday. These are exuberant moves in the indexes. And we're starting perhaps to see if this will lead the markets higher. Perhaps the most bullish are the canaries. A couple weeks ago when I last did this, I talked about how we were sort of in a wedge and that the canaries being the big monsters in the market led by Facebook, Netflix, Google, Apple, Amazon, also Priceline, LinkedIn, and Tesla. We use these as a sign of market strength and weakness. I mentioned that earlier in the year there was a big sell-off, and that when this bottomed in February, it turned out to be a great buying opportunity. So we broke out. Not only we break out, we broke out decisively. Everything's green up above. These look like they want to go higher. If they do, my portfolio will be happy, but I think this will take the market up. Know your earnings and news. You can see a lot of still, even though we had the big unemployment report was Friday, we still got some productivity, labor costs, job openings. We got energy, continuing claims on the 11th, PPI, retail sales, Michigan sentiment, business inventory. So plenty of market moving opportunities this coming week. And at least the beginning of the week, a lot of earnings. And then perhaps this earnings season will start to slow down looking at Wednesday, Thursday, and Friday. As I said before, and I like to say every earnings season, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I play a lot of biotech, and that means I have challenges where I may wake up one day to news that a company's trial was just released as negative, and I could see a stock fall hard. Well, on the other hand, I also have the opportunity of the opposite. When a company either gets bought out or has positive data, and the market opens up large. So those I can't help. Now, it turns out I can, because if you have few enough stocks, you should know all the major dates of what's going on with your stocks and your investments. But when there's news that you don't know, it's not always your fault. But when it's earnings dates, it is your fault. So market rotation in place, indices continue to move higher, markets less overbought than you might expect. Technology and biotechs. I put this in here about probably 3 weeks ago, and I hope people listened to me and bought some LABU, because that really had a big return if you bought biotech. Financials firming with rates rising. We showed you that already on Friday. That means, actually this one I should change, because utilities are weak. It means that insurers and REITs were also stirring as I, look through my market review this week. Again, earnings reports will drive individual performance. And as I mentioned earlier, strength of the dollar could be an issue for some commodities. Usual agenda, take a look at the market from a top-down perspective, and as time allows, do some bottoms up. Also do my chart of the week. I refer you to my last video, which I looked at how I find my favorite setups, because I go much more in depth on the bottoms up approach. Since I didn't meet last week, there's really no chart of the week to review, so we'll come look at the chart of the week in a few minutes. Let's jump over to TradeStation. Let's just show you what the market looks like. It's going to be a broken record. Here's the NASDAQ. It's been in a buy signal since the beginning of July. It is green, which means Elder's Impulse is also consistent. So those who haven't been here before, a green bar means that Elder's Impulse indicator says it's okay to buy. You can also hold. A red bar tells me that I should be short or holding but not buying, and a blue bar gives me my choice. The arrows are the PPS buy in green and sell signals in red. I look at these dots that can be on top of or below a price bar, and they indicate evidence of divergence or potential MACD divergence. I will also look at the high jump. When it's at 100%, that means it's the most extended it's been in the last, in this case, 200 bars. So that's a reason to think that this market is getting overextended. I will point out that it'll be 100 tomorrow if it goes up, and 100 the next day, and that notice how I'm at the edge of the envelope here. And strong bull markets, we just march up the upper envelope. So even though it's at the upper end, it doesn't mean it's going to roll over. And so I've got the daily, the weekly, and the lower part, the monthly. So the NASDAQ, green, 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 all three are a buy. NASDAQ looks strong, getting overbought. That's my dog crying, so in a second I'm going to stop and take him into my wife's room, or my room, but I'm doing this thing. Put him in my bed, which is where he wants to go. This is the Dow, daily, weekly, monthly. Green, blue, green, buy signal throughout. Fresh new buy with a high close doji. Imagine that occurring in the Dow. Very bullish sign at 87%. So Dow looks pretty strong. S&P 500, like the Dow, a new buy signal on the daily in green, green, and green. Everything looks good. Again, that doesn't mean it's going to stay that way. All we are is one news item away. This is what it looks like when you have some MACD convergence or positive divergence, which could signal the bottom. And we saw that back a little ways ago. That was probably in February. And then if I look at the Russell, I have a new buy, green, green. So the indexes look strong. I'm going to stop this for 1 second and go put him where he wants to go. I will be back. All right. Put my dog where he wanted to be. If you saw on Facebook today, actually, my wife took a picture of him sitting on my lap as I was going through my charts this morning. All right, let's quickly look at the sectors because there is something to see here. Materials, a new buy signal, both green, new, and arrow up on the daily. Remains in a buy on the weekly and monthly. So a new buy on materials daily. Energy, also green with a recent buy 2 days ago. And on the weekly and monthly, also in a buy. Financials, another new buy. So we've got new buys coming into new sectors here. Gapped up on Friday, already getting some divergent signs, but green and in a weekly and a monthly buy. Industrials, a new buy, a high close doji on the XLI. Weakness kind of on the elder blue and some MACD divergence on the weekly. So something to watch, but as I said multiple times, things have a tendency to stay up at the top and for even the divergences to go on for quite some time. So industrials, technology, recent new buy, again at the top of its range with that red dot on both the daily and the weekly. So far, materials, energy, finance, industrials, and technology all look extremely strong. Well, what was leading the market a month ago? It was staples and utilities. Well, staples, I talked about here where I thought they were going to roll over, and they did. In a sell signal and a new weekly sell signal after this divergence for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row before we got the sell signal. And blue, but a buy signal on the monthly. So this is weaker than the others. How about utilities? Same story. I thought these things were getting long in the tooth, and I mentioned it. They sort of whipsawed, but we now got a new sell signal on both the daily and the weekly, and utilities look like they're breaking down. Healthcare also with a new sell signal, but still weekly and monthly in a buy. And then discretionary, a new buy signal. So weakness in staples, weakness in utilities. Healthcare looks a little confused, and let's go on. So the next thing I do is I now, make sure you're recording, good. I now go into HGSI, and I'm going to go into Woodward & Brown user group down here, and let's look at Major Markets Plus, and let's look at the top-down view, which is just price and volume with heaviest weight on 1 day, then some for 5 days, and just a little bit for 3 weeks. And it shows that the strength of the market is in the smaller stocks, NASDAQ, small caps, and then the industrial average, and transports, mid caps. Bonds, silver, gold, Dow, gold, volatility on the weakness. So money rotating into stocks, especially smaller stocks. Be interesting to see if that continues. Let's take a look at some of these. So let's open up the S&P 500. Now, I know that there were kahunas pretty much across the board. The kahunas are just an exuberant move in the stock within its Bollinger Band. That was sort of a layup because you could see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Really about 17 days where the S&P did nothing. And then big breakout on Friday, PSAR reversal, Mobo breakout from a squeeze, and a kahuna. So this looks great. Now let's just take off everything because we know there's kahunas. Let's take a look up here. So the weekly bongo, which I talked about a couple weeks ago, remains in green. The daily bongo went red for a short period of time, which was consistent with the pullback, now flipped to green. So let's just, out of curiosity, let's just redo some of these things. We are at a new high, but from this bottom up to, let's see, we'll go up to this top because this was the highest we got to. We moved up 17.2%. From this bottom up to the peak, we moved up 13.4%. So this move, which has been massive if you've been long, has only been about a 10% move in 28 days of trading. So remember this one up here. I'm not certain that we don't have a little bit more room to grow. So again, this was like 17% move in 81 days. So I don't know when this is going to end. I do know that there is nothing that says it has to end tomorrow. I also know that there's a lot of news out there which will come in and surprise us when it's ready. But here's where the high was. We are at new highs. Whoops, let me try and do that again. I'm sorry. I got to remember to take my finger off the mouse before I take it off the shift key. So we have broken out to new highs, and I think we've got more room up to go. I had thought we might come back and test. We tested the 17 and we bounced off. So S&P looks great. How about the Dow? Any bets? It looks pretty great too. Multi-day pullback definitely looks better. Hold on a second. All right, how about the NASDAQ? Strongest one, and you could see, let me see, are we at a new high on the NASDAQ? Let's see, I think I know the answer, but let's check it out. Let's do a line, not an arrow. Let's make it red. Let's touch the top. I'm probably looking at intraday here. Let's bring it over, and we are right at our high. So out of curiosity, let's, I don't know why I just did that. The high here is 52.31.94, and the high there is 52.27.23. So I'm sure I could change this by moving it up or down. As far as I'm concerned, we're close enough to an all-time high on the NASDAQ. And then if I look at the Russell 2000, I'm nowhere near a new high. But we had a flag, and we broke out of the flag. We retested, and we'll see if we can run up to new highs here. So the indexes look strong. What's not so strong? Well, the dollar failed, but the dollar is going to try and get back up there. We'll see. If the dollar gets up above this 200, this is going to have some issues on commodities, especially gold. And you notice there was a big gap up on Friday, but it could not break above the 17. So if the dollar was strong Friday, what do you think gold did? Looks like the same chart. Gold fell back to the 17-day. And what about silver? Failed here at the 1,000-day and broke down as well. If you're a gold or silver bug, you need to watch the dollar. This could be an interesting week. I'm still thinking gold's going to go higher, but we shall see. iShares, this is bonds. This is one of the short positions I have right now. I shorted it back up here in the 140, 140 and a half range. I haven't gotten stopped out yet. I really thought that I would have been happy with this short on Friday with the strong jobs number. I still think I'll be happy with the short before it's done. All right, so I just got a sense of what the market's doing. Now let's go down to industries. and you can see I've got 171. And let's look at how many are moving up. 80 are moving up on a short window, 71 on a longer window, only 3 to the downside, and on the longer window downside 19. So just to look very quickly at the 3 to the downside, precious metal, cable and satellite, and casinos, no surprise on the precious metals. I think the others are earnings related. So let's look at some of the groups that made the top 10. So what do we have here? Energy pull back. Is energy moving again? Is the number one rated group by force. Banks, rising interest rates, good for the banks. Oil, gas, services, diversified banks, semis, beverages, internet infrastructure. Biotech is here. Airlines are here. Steel is still up at the top. Mortgage finance, saw a lot of interesting stocks there. Let's just take a look at a couple of these. I'll show you how I basically do my analysis. So what I do, and I'm going to show this for people that are new to HGSI, is this is how I do my, as my wife calls it, and Ian used to call it, flicky flickies. I open up a daily chart. And I'm going to put in that daily chart my webinar view. So it's going to make it tough to see the stuff here, but that's okay. I'm going to raise it up in a second. I'll make it bigger in a second. I also like to open a new HGSI window, and I'm going to make this either a simple chart with moving averages and make it weekly, or I might use the secret Chris Wilson shorting chart, which looks at, on the bottom, the relative strength of the instrument versus the S&P, and on the top, it looks at versus some of the major 10, 20, and 40-day moving average. It's got the weekly bongo, and then you can hardly see it there, a little kahuna, which is a buy signal. So what I want to do is I want to make those a little smaller, make that a little bit bigger, and I'm going to even take out the earnings window, make it even bigger. So let's just go through this very quickly. EOG Resources, and notice I've sorted by raw combo. I could see on the weekly chart that it's been in a nice uptrend since the January. It had a big up bar this week. Relative strength took off. Kahuna, Bongo Weekly, has been green for a while. You can see the Bible gap up here, a kahuna, out of a squeeze. That looks good. And I might put that on one of my buy lists if I wasn't already heavy in a couple of these. EP Energy, oil and gas exploration. You can see here it's starting to have some small profits. Big pullback. Gapped up on Thursday, stayed up on Friday, although red days, that doesn't look that exciting. I did a capital sin. Notice they're in alphabetical order. I've got to double click this again. And now notice it's the next stock in the list. Oasis Petroleum, hard sell-off, up 3 days in a row. Kahuna on Thursday, notice it had a Kahuna weekly as well, still the bongo. Weekly's green, is red, I'd pass it. Pioneer Natural Resources, beautiful chart. I had a buy signal a week ago that I looked at. Everything's green up above, 1, 2, 3, 4, 5. So that would have been sitting here on the 200, or the 50 rather. The only reason why I passed on it was the price of the stock. It's expensive stock. Parsley Energy, sideways, consolidation. Bible gap up. Looks like it wants to run. Again, the time to buy these, and what I like to look for, my buy signal, is I look for this new weekly bongo green in a kahuna occurring, and you can see what happens. You break above relative strength here, and you're breaking above moving averages. So a little late on Parsley, and then Devon is one that I do own. Devon has been in a sideways consolidation. Earnings came out this week. Nice move up on Friday. I still like Devon Energy. All right, the next group down are banks. So we're ranked by raw combo. We'll look at a couple. They probably all look the same. Stocks have been in a downtrend, broke above. Weekly bongo turned green. Big kahuna and pocket pivot on Friday on the daily. Been in a downtrend, pick one. PNC the same. U.S. Bancorp looks a little bit better, breaking out. If I want to buy some banks, I may just go buy KRE. And KRE is an ETF that looks a lot like PNC that had a pocket pivot and a kahuna on Friday. All right, so you might go down that list and see if there's anything that you like. Oil, gas, services. So I don't know this one. Something happened to this one. I'm going to count this in the land of the heirs. It looks like the stock went up. That was a 20% drop. Let me see if I can get this figured out. You had a 342% gain on Friday if this is real. So we're going to ignore this stock. And if you owned it and had a 300% return, please tell me why you bought the stock in the first place. Schlumberger, the big kahuna in services, nice move up since bottoming in January. Weekly bongo remains strong. Not a big mover, kind of boring. But if you're looking at oil services, it's the big kahuna. And it's certainly lower left, upper right, although not exactly one that I would call tight by any means. Transocean rig, RIG, below the 200, trying to make a move up. Not so exciting at this point. Halliburton, just like Schlumberger, but below the 50. I still like Schlumberger the most. National Varco trying to break above the 50. You see a bunch of these that are sitting right below the 50. A breakout here might be interesting. All right, what other groups look good? Diversified banks. So these will be the big puppies. So the Bank of America. This has been a one that you sell around 15 and you buy it at 12 or 13 until it stops working. And we're back up to 15. So the bad news on Bank of America is you're right at resistance. The good news is you're in a weekly bongo. You just had a kahuna in the weekly, had a daily pocket pivot and kahuna. Everything is green, mobile breakout. And one of these days, these things are going up, and maybe that day is now. You did break above 200. There's no moving average just sitting above you to act as resistance. You can see the group strength. I do like Bank of America, but this is where it's reversed the last 6 months. Citigroup has to get above the 200-day moving average, otherwise looks similar. JP Morgan has been the strength of the group, and you can see it's well above its moving averages, coming out of a squeeze with a kahuna, a pocket pivot and a kahuna, and looks good on the weekly as well. JP Morgan looks good on the banks. And lastly, Wells Fargo, far below the 200 and the least of the four that I'm interested in. Back. The next one down, let's see. Semiconductor devices. So we'll look at the first 3 or 4. Micron Technology. This is one that looks like it's setting up. It's right below the PSAR dot. Moving up off of a deep bottom. Group strength, mobile breakup from a squeeze and a pocket pivot. Don't really love the earnings per share growth, which I see over here. But this could be one of my get on a plane trades, as you can set your stop probably above 13 and buy it when it takes out the PSAR dot. Not an optimal looking chart. NVIDIA, a lot of people would say, Jeff, how can you look at NVIDIA? It's had a big run. Isn't it overly extended? Well, the first thing is look at the earnings per share growth this past quarter, 42% next quarter. Here's something I found out today about NVIDIA. Earnings are out. So when is the strongest time of year? Actually, earnings come out August 8th. So earnings will be Wednesday, it looks like. So I'm not going to tell you to play earnings roulette. But if I look at the strongest part of the year, let's put it on an earnings seasonality. And we go, well, here it says it was August 6th. Well, we need to figure out if the earnings are out or when they come out. Notice that in this period of time, it's up 9 out of 10 years between July 26th and September 15th. with an average return of 12.1%. That's pretty darn impressive. So NVIDIA, although it's had a major run, is kind of getting to the point where it's at the highest part, it has the highest movement of the year. Just to validate that, I actually looked it up using EdgeRater, where I do the Hindi and some of my other tools. And let me just highlight the actually, let me just do this. So NVIDIA, if you look at for the next month starting Monday, has been up 14 out of 17 years with an average return of 10%. Not saying it's going to go up now, but it's a leader. It's been leading for some time. It's going into a strong seasonality, and it still has good earnings per share growth coming in next quarter, and has a PE of 41. So NVIDIA looks interesting to me. Broadcom, another one that looks interesting, kind of loose, but lower left, upper right, breaking out to recent highs. In a weekly bongo, relative strength increasing, everything is green. I actually have a position, for full disclosure, in Avgo, AVGO, also known as Broadcom. And then Intel Corporation, I got a flag, so I'm going to keep my eye on Intel. Earnings are not that impressive. All right, next. So after semiconductors, we got beverages. We'll just look at that for the sake of giggles, probably driven by Monster. What's the first one? So Brown-Forman, I don't know what they'd have. Canadian Mist, Jack Daniels, okay. Looks to me like we got some bad data. Probably was a split here, and we didn't get it right, so I'm going to skip that one. Monster Beverage had a gap up on Friday, sort of a ugly looking candle. It closed where it opened after trading much higher. I don't usually chase something like that. Could be the beginning of a low close doji. Also could be an evening star formation. We'll see what we get on Monday. Ambev, nice uptrend, breaking out. This is in some type of M&A activity on this. A breakout, mobile breakout from a squeeze. Kahunas, everything is green. That one looks good, but I would really want to understand the breakouts better. What are the buyout? Cott Corporation. All right. So Monster looks interesting. That's probably falsely up there for bad data. Internet media. All right, we'll go through the first couple. Facebook. I saw a lot of complaining on the canceling boards. People bought it, probably bought it at earnings, and are complaining that it's not going anywhere. This is like standard operating. It gaps up on earnings, it pulls back, and it gradually moves up until you get the next earnings, moves up, sells off until you get, and then ultimately earnings propel it higher, and we gapped up here and we pull back, and we'll see if it doesn't follow truth to form and head higher. You can see the group strength. What a great stock, what a great run. The funniest thing is I took my original position as I sold some puts, and they got put to me, and it was one of my larger losses I ever took. But I actually sold the puts to reduce the cost of buying the stock because I wanted to accumulate the stock. That was a good deal at the end of the day. Google, breakout on earnings, kind of sideways since earnings. It's Goog, Goog-L, similar looking pattern. Twitter, kudos to one of you who emailed me and said, what do I think about Twitter back when it was down here? Or actually when it was down here, and I said, you're playing a game for potential takeout. You're looking at the fact that it's been higher in the past. I'm not a Twitter fan. I don't even use Twitter. I use everything, but I don't use Twitter. And then it went and had a very nice run. But, you know, Leopard doesn't change its spots. It's got some issues with earnings and growth of users. And I'm still not a Twitter fan, but maybe someday it gets taken out for $25 and makes the Twitter holders look like they're smarter than me. And they probably are smarter than me. I didn't mean to be condescending by any means. Baidu, well below the 200, looks like it wants to move up, but it's still in the penalty box. Weibo, a lot of people like this. Why wouldn't you like it? Nice, tight, lower left, upper right. Pull back to support. Broke out again on Friday with a kahuna. It doesn't have much in the way of earnings per share growth. I believe it's a Chinese play, but what a beautiful chart. Wish I would have been smarter and owned some of that. I guess that's it on this group. Back number 8 will be infrastructure software. So again, a lot of buyout news. Rackspace, don't know much about who's buying it or how much, but it's hit the market on Thursday after hours. Well, before the end of the day, you could see it traded up. It traded up higher after hours on Friday. So this is probably driving some of the movement in the group. You could see it had 12 million shares. If I go back here on this day, 72111612221. 12 million shares is a lot of shares, so people think something's going to happen. Unless you have some insight, I don't like chasing those. I wouldn't chase it. Semantic, gapped up, but sold back to the gap point. Again, I don't like this pattern. I don't like buying them after the gap up at the top of the bar. I don't like buying them when they sold off. This suggests to me that we could have the beginning of a evening star formation, and I wouldn't touch it right now, but a big move on the weekly. We'll see what Semantic does this week. Microsoft looks pretty darn good. Hard to believe we talk about Microsoft and Intel today. That's not a high close doji because you're in an uptrend, but weekly kahuna is green. Stocks breaking out to recent new highs. Everything is green. Not a big Microsoft guy. All right. Back. Communications equipment. So is Apple going to lead us to the promised land? You know, Apple's broken above its 200. You can see the group strength is there. Its bongo is green. It's got a refresh of the iPhones coming in. Enough people have said bad things about Apple that maybe Apple is going to go higher. I'm not into Apple right now. You know, since I do have a lot of long positions, I'd be very happy to see Apple do well, and we'll see if it can stay above that trend line. But Apple's trying to make a charge, so if you're an Appleonian, you might be excited. Motorola Solutions, I know they came out with a good phone. I don't understand all the different companies after some of their divestitures, spin-outs, etc. But I can't argue with the fact they had a big move up here. Lots of pocket pivots. Kahuna, everything is green. Weekly went green. You had a weekly Kahuna breakout above its moving averages, and now about to become better relative strength than the index. And we've got great earnings per share growth. The stock has a multiple of 19 and a growth rate here of 82. Revenue change is flat. EPS change here 31.2 looking backwards. So Motorola looks cheap, and it looks like it's got some Momo into it. Ubiquity Networks look great. Came out with earnings. Bob will gap up on Friday. Don't buy these unless you read Morales' book and know how to trade a Bob will gap up. The stock might be buyable, but you better know how to trade that type of a trade. I'm not going to teach that today. Cisco moves up in steps at a time. Looks like it wants to break out again. It actually pays a small dividend when it's earnings. Earnings are out August 17th, pays a 3.4% dividend. So I always go through every night the top 10 groups. E-commerce discretionary, can you say Amazonian? Ooh, Netflix too. So Netflix, of course, I sold off my Netflix, but Netflix is struggling like Apple did for some time to get above the 200. The weekly bongo did turn green. It did move up above the 50, have a PSA reversal and a pocket pivot. I'd like to believe in Netflix again, but there's a lot of competition, which is why I sold my position. But I will be watching this for a break above 200. If I get my melt up, I'm not saying we're going to have a melt up. I'm saying we could have a melt up. If we get our melt up, then Netflix may get its breakout, as will everything else in the market. Mercado Libre, the eBay of South America, breaking out to probably all-time highs here. After a 20-point move is a little late to chase. Bible gap up, closed at the top. I'd like to see it come back some, and after a move like that, it would not at all be surprising to see that. And then for those that are like me, Amazonians, if you look at where the stock has moved, so we've got 124 trading sessions, so that's about 6 months. And we're up 60% on a stock that was about $500 when it started the move, 475. That's freaking nuts. That is a huge move, a huge grower. And speaking of growing, is it too late to buy Amazon? We are about to go into one of its best times of the year. From August 12th to September 23rd, it's up 9 out of 10 years, an average of 10.3%. And that's matching up earnings for earnings. So I'm pretty excited. And if I take out and don't match it along earnings, it's from August 4th to September 16th, 11.2% gain. Now, the only bad news is I only have, do I have 10 years of data? I guess we do have 10 years worth of data. Never mind. So, pretty cool. I think Amazon is in the beginning of a nice move, and hopefully Amazon, Apple, Google, Facebook will take this market higher. JD.com, kind of struggling. I think there was some M&A discussions there. eBay. I hadn't looked at eBay in a long time. eBay is kind of at all-time highs. Son of a gun, look at that. How did I not pay attention to that? Now, there have been a lot of splits, so I don't know if its dollar price has been higher, but post-split, this is the highest eBay has been. So that's on a monthly chart. So eBay looks interesting. Bible gap up, a little bit of a flag, maybe breaking out. Might be worth watching eBay as well. Maybe pulled up by Amazon and the others. And Alibaba looks strong as well. A couple of other things to look at. Biotech was number 11. Here's a stock that's had a great run, Exelixis. Looks to me like a stock that somebody's accumulating is going to be taken out. But if you had just paid attention to it, back here, which would have been late April, all right, so here's May 13th. You would have bought it here on the weekly bongo in a kahuna. So let's go to May 13th. All right, so that's the bar. But you bought it at the end of that day. You may have lost for a couple of days, but you'd now be up 95% in 58 periods. I'm not going to go through all the list of biotech, but biotech has been strong. And one way to play biotech, and maybe it's too late, but I have a pretty nice position in LABU. Now, this doesn't look that exciting, does it? But let's go back to, let's see, when is this? This would have been July 1st. All right. And we have a name for that bar. That's a high closed doji bar. So if I had bought after the high close doji on July 1st. I think this is very deceptive. Look at all the bugs. You could have bought, here it is, July 1st. We're up 48% in 24 trading days. I took LABU. There have been a lot of nice moves. I'll show you a couple of them off the top of my head. Celgene, stalling perhaps up here, but it's moved from less than 95 all the way up to 117 and beyond. That's been a leader. Biogen IDEX, some M&A interest as it popped above its moving averages here. It kind of looks like Celgene, but at 319. The best stock in the S&P 500 since the bottom, Regeneron, doesn't look so good. Failed at the 200. We'll show you one of my favorite biotechs in a few minutes as far as the chart of the week. One that I didn't take as a chart of the week that I do like, and the reason why I didn't take it is because, I'll show you, Alexion, earnings are due. Actually, earnings are out. I didn't take this one. Now I can't remember. But what I liked about Alexion was, I didn't take it because it's in a downtrend. I like to see it above the 200. I almost took it for the run up here between 138 and 152. Because you see if it runs up here, it's failed at that 200 several times, but the weekly bongo turned green. This one actually was interesting and almost was my stock of the week. It's still in an active high close doji situation. OBV has turned up. That's Alexion. All right, so I've looked at those groups. What I typically will do is build myself a watch list, and from that watch list, I'll pick some buys. So let me just go through some of my favorite stocks from this week's review, as I'm starting to get tired, and I'm sure you're getting tired of my voice. So these are the stocks that made it to my buy list. And what does that mean? It means I put these in a list of stocks that I'm interested in. I then put that list into TradeStation. And then I sit back, I relax, and I remember my primary colors from elementary school and kindergarten. And I look for, on my buy watch, I look for HCDs, I look for PPS buy signals, I look at where we are in relationship to support and resistance in my pivot point, and I use my tools to find the stocks that are setting up to be bought. So that's why I play a big watch list. Let's just quickly go through them. You've seen many of them, and when I think it's time to stop, we'll stop. So let's just go change it to webinar view. Let's make it big, and let's make sure. All right, perfect. So Weibo, I already looked at it. Big uptrend, sideways consolidation, a bunch of kahunas out of a squeeze, breaking out. This looks good. I'd probably buy it even though it's extended, but make sure I keep my stop probably not far underneath here. Maybe give it to the PSAR dot, but no more. Amazon already talked about, not exactly sideways consolidation, but kind of a sideways consolidation. I think it wants to run. Notice the multiple is starting to come down as it makes more and more earnings per share growth. And believe me, I'm convinced that Bezos can just turn it on and off. He's got so much revenue, if he stops some of his spend, the earnings will pop up. But still big earnings coming in as the multiple is starting to come down. Dycom is a technology play, or infrastructure play rather. Industrials pull back to the 50, showed up on my scan, and it was time to buy it again. This is one of my pullback to the 50, and then you get a kahuna on the bottom as well as pocket pivots, plus the squeeze and the MOBO. This is a buy again, great earnings per share growth, more than twice its multiple. Energy recovery, It's funny. I had bought some calls on it, and then the stock sold off, and calls became worthless, so I kept them. Then this happened, and now my calls are in the money. And we had a earnings beat. Kahuna, everything turned green. Look at the earnings per share growth coming into the stock. If I look at the last four, -1, -1, that's -2, +7, +5, -2. We had a nickel in those four. I'm going to have 50 cents, 57, 55, and if these numbers are met after two more quarters in a trailing four. It's trading at a multiple of 22 off of that 55 cents. Look at the growth rate. Me thinking it's undervalued. That's why it's on my list. VIPS. VIPS was once a great retailer, Chinese retailer stock, flash sales and things, and it got hammered after a 7-to-1 split. F1, let's see if we can figure out where the split was. Yeah, it doesn't matter, does it? Here it is. So the split was in September of 14. And sometimes you can have one split too far. And the stock, I think it was a 7-to-1 split. It did run up here into May of 15, and it's just gotten hammered since then. Trading at 14, which is half of where it was a year ago. VIPS holding, why did it make my list? Broke above moving averages, bunch of pocket pivots, everything is green, and it's got some earnings coming in. At Killian Pharmaceuticals, I really didn't like it that much. I liked it breaking above the 50. Everything is green. In a Kahuna, kind of a sideways market, not that exciting. Broadcom we looked at. Charles Schwab, this one, Interactive Broker, TD Ameritrade, all breaking above their moving average with Kahunas and pocket pivots. Looks interesting, makes money. Not that much. Momo, Horizon Pharmaceuticals, I like the chart breaking above the 50, retesting. Don't touch. You can't buy it before earnings because earnings come out Monday morning. Applied Materials, an old name in the technology space. Great earnings per share growth, twice its multiple, pays a dividend. Kind of looks like it wants to run higher again. Beat, now called Biotelemetry, sort of an extended long run. I like the earnings versus its multiple. Looking to buy this on a pullback to the 50, where it's been a nice place to buy in the past. Semtrex, a pollution control company, great earnings per share growth coming in, pulling back to support. It's a cheap stock without a lot of volume, probably not appropriate for most people who listen to me. Two stocks in the same industry, Greenbrier and Trinity, basically the same chart pattern. These have been in a bear market for quite some time. Yet if you read their earnings reports, they don't look so bad because they got huge backlogs. They're tied to trains. Trains slow down when oil and fracking slows down. You could see the stock has gone from 75 down to 32, 33. Why am I showing you a stock that's been hammered? Well, let's look at a couple reasons. Here's my pattern, up and down. They repeat this pattern that I showed you in the beginning over and over again. And nice period of trending. It's been not really trending over the last several months, but is something changing here? I think it might be. I want to keep an eye on it. Here's a bank, regional bank. Again, KRE is an ETF you could go with, and breaking above the 50-day moving average. You can see the group strength. New Oriental Education, don't know much about it. I've lost money on it in the past, but what I did like is it's at a steady uptrend. It's pulled back to the 50, and this has been a good place to buy in the past. Here's another bank, a little bit more of an uptrend than some of the others, breaking out above its moving averages, Mobo breakout, and a Kahuna. Pretty darn good earnings per share growth rate, pays a 2% dividend. Ship Finance pays a huge dividend, just had earnings come out. Ugly chart, very sideways. I like the 11.9% and the Kahuna on Friday. I'm watching it. I'm not buying it. Trinity is the other stock like Greenbrier. Anything I said there, ditto. We'll come back to this one. Electronic Arts, breaking off of the 50, sort of a high close doji out of a squeeze, and a kahuna. Looks like it wants to go higher. Look at the earnings per share growth coming in. Another bank, same pattern, sideways, breaking out above the 200. Redwood Trust, again, not a very exciting chart. It's broke above the 200. It's got a steady uptrend, but it also pays a 7.8% dividend. Teradata, IT Technology Services, been in a long downtrend. Let's go look at weekly. Broke above its moving averages this week, and looks to me like it wants to go higher, and it's done going down. I'm not going to tell you anything about Clovis. It popped a little bit this week. It's a beaten down biotech, probably not for anybody but me. Ambarella, sort of that stock that's been in a pretty pronounced downtrend, sideways, broke above moving averages, sitting right below the PSAR dot. This is one that might be a reasonable choice for my get out of plane trade. Why? Because I could set a buy stop sort of right above that PSAR dot. I could set my sell stop low of the last 4 days. So I got a buy right around 60 and a stop at 56.50. So I'm putting about 6% at risk. I won't trigger unless the stock takes out the PSAR dot, which would trigger other people who are Wells Wilder fans to possibly take the trade with me. I like Ambarella. I'm trying to remember what I liked about Finisar. Except maybe it's breaking out of its multi-month highs. Broke out on Friday. The kahuna, pocket pivot, mobile breakout in all green. This looks interesting. This was also a consideration for my stock of the day. I passed because it's in a downtrend, needs to get above the 200. This is BOFI. Look at the great group strength, mobile breakout out of a squeeze, pocket pivots and kahunas. Dolby Labs, talk about tight, lower left, upper right corner since the breakout in January. Basing off the 50, had a kahuna. Take out that PSAR dot. I might want to chase this one up. Go for a ride. 5.9, nice uptrend, sort of a cup in a cup, and then a handle and a breakout. Bobble gap up, mobile breakout from a squeeze. Kahuna, pocket pivots, lots of momentum coming into this name. Hilltop Holdings, Banks and Investments. Looks like it wants to break out. PSA reversal on Friday, pocket pivot, kahuna, everything green. Also mobile breakout from a squeeze. I guess I'll go through all of them. Lincoln National is an insurer breaking above the 200, pocket pivot, kahuna, mobile breakout, everything is green. Forum Energy Technologies, don't like the earnings per share growth. What I liked was the breaking above the 50 with a kahuna. It's one of my setups. Steel's been good to me, and this is a steel play that's moved some. Look at the earnings per share growth that's coming into this industry. Doesn't pay a dividend, but as the earnings per share growth goes up, as the multiple goes up because of that higher EPS growth, this may look like U.S. Steel eventually, and if you don't know what I'm talking about, go take a look. Alexion, I already mentioned, another bank, Northwest Bankshare. This one actually has had momentum to the upside, pulled back to the 50, bounced off with a kahuna, mobile breakout from a squeeze. That looks compelling, pays a 4% dividend. Ternium, I think this is an Argentinian, maybe it's somewhere else, another steel player. I like steel, great earnings per share growth, pays a 3.9% dividend. Latin America, Mexico, Venezuela. NMI Holdings, another insurance company, again with rising interest that will benefit these. Broke above resistance. CSX, a train. I just like the fact that it's setting up here a base, had a mobile breakout, and I've just put that on a watch list and say I'm buying it. Looked at Devon Energy already. FN sold off pretty hard. This is a technology play, great earnings per share growth. Sometimes I buy these things once they pull back to support. Give me some momentum, because if you could have bought it here, anywhere around here, anywhere over here, and frankly anywhere this entire way up, sitting on the 50-day moving average, you made money. Why is it going to be different this time? KKR pays a 4.4% dividend, broke above the 200. This is a common pattern today. Doesn't mean it's going anywhere, but it's one that I will be watching for additional buy signals. Media General, a sideways stock for quite some time. Earnings came out, were strong on Friday. Great earnings per share growth coming in, plays at a discount. Don't know why it's at such a big discount, but when I see sideways consolidation sitting on the moving averages, mobile breakout from a squeeze, everything is green. Pocket Pivot and Kahuna. Meg made my list of interesting stocks as well. Dynavax is a biotech play, bottom fishing, mobile breakout from a squeeze. I'm not that excited by this. Here's U.S. Steel. Remember I mentioned if you haven't seen it, you need to look. U.S. Steel, again, right here. Mobile breakout from a squeeze, a Kahuna off of the 50-day moving average. Would have gotten me in, and did get me in about a little bit over 8.5. It's now 26, and that's after a pullback. And look at the earnings per share growth coming in. Small dividend, U.S. Steel. Continental Building Products has pulled back to the 50. I don't buy just because it's pulled back to the 50. But what I will do is I'll stick it in my radar screen and watch it intraday for evidence of momentum. Depomed, sideways, breaking out with Kahuna and Pocket Pivots. Colony Starwood Homes, don't know anything about them. They only trade about 800,000 shares. Beautiful pattern up, sideways now, mobile breakout from a squeeze. This one looks like it might want to run again. Great earnings per share growth. This one also was a consideration for my chart of the week. Broke above the 200 today, had a big gap up. Bible gap up, mobile breakout from a squeeze. Kahuna. If I was to buy this, I'd probably buy it at the open if it trades above 6.5. Put my stop maybe about 30 cents below the bottom of the gap up bar. And we'll see. I'd have to measure the stop and see if it's too far for me to take the trade. Pays a 7.4% dividend. Global Entertainment chart's horrible. Why did I like this one? I think it showed up on my high close doji scan. It is all green here. It's a big move off the bottom. Longer term, it doesn't look so good. Host Marriott has broken above its moving averages, going sideways here. And Morgan Stanley broke above its 200. Looks like it wants to go higher. All right, I'm getting tired, so my analysis is getting weaker. All right, so those are some of the stocks I liked. Why I showed you some things about the market. Let's go back to the PowerPoint. Charts of the week. These I put together just to show people how I think. I present these for education purposes only. Trading, especially if I use options, carries risk. I do not warrant any expectation of return. I may or may not already have a position in the stock. I plan on taking the trades if they execute so I can discuss on the following session. And I do this not to provide stock tips, but to openly discuss how I take the trade, why I choose a specific stock or option strategy, and where I plan on taking profits or placing stops. So I'm looking at ALNY. This is a biotech play. It's an expensive stock, and it's highly speculative. It sold off hard from 135 down to the 60 range. It's now recovered back to a little bit under 80. And on Friday, it broke above the 200-day moving average. Had a Kahuna on Friday, recent pocket pivots. Everything is green up here. And look at the group rank, or strength is so high. A lot to like on this chart, including OBV heading up. So I looked at on the on the trade station, and I see it's in a daily PPS buy. It's been in one for a while, but a recent weekly buy. Look at the strength of OBV on weekly and on daily. OBV taking out prior highs here, even though the stock has come down in price, might be a positive divergence or convergence. So I'm going to put a buy stop on that white line at 78.50. My stop is at 71.60, which means I'm risking $6.90 or 8.7%. My target, you know what, I didn't update this. Dumb. So my target would be, let's do this manually. What's 690 on to 78.50? 85.40. So my target is 85.40. And if I can risk 2,000 shares and $2,000 and I'm risking 690, I can buy about 300 shares for every 2,000 of that I'm willing to risk losing. I held a Pug user meeting last week. For those of you that are Puggers, I will be doing one on the 18th. This would only be for people that own John's Lifetime Indicators. The one I did last week, I did open up to everybody. I know I owe the Pug group a couple of meetings I've been behind. Hopefully the Puggers watch their, the VIP Puggers at least, they're trading with John this morning. Like to see you at the summit if we could. There's my email address. There is an opportunity, I think, for us to get some discounts on a package of my meeting and John's meeting and John's indicators. I've got a number of people that I put together in a bid, and if I get a couple more, I think I can get even a bigger discount for Mary. So if you have any interest in that, please reach out to me, hgsidoc@gmail.com. I already did that. We hope to see you in Florida. And on that note, I'll say good night. Good night, everybody.